Video, I'm going to walk you through exactly how to make a living trading SPY options, and I'm not going to leave anything to chance. I'm going to give you the exact blueprint I use so that you will never be confused and you can do this for yourself on repeat. So let's jump right into it. All right, so this is a chart of the S&P 500 ETF SPY, SPY. The first thing you need for this video is a broker platform or a charting platform of SPY. Right now I'm using TradingView.com. You can use your broker, Robinhood, Webull, TD Ameritrade, whatever it is, that's your program. Next, you need this trading handbook guide. This is the step-by-step strategy that I'll be using for this video, and I give it away completely for free. All the years of research and studying that has gone into making these approaches and strategies is yours for free. So go in the description down below and click it and join, because this is the program for you. But again, it's completely free. It's just a PDF download. Anyways, so once we have that, we're going to be looking at SPY, and now we need to add some indicators to our chart to make this more obvious in what we're doing. All right, so first thing we're going to do is we're going to come into here. We're going to go into the indicator section. We're going to come over here and type in Bollinger Bands, which is Bollinger, Bollinger Bands. Right here, we're going to add it to our chart. We're going to make some customization to this. So again, if we go in here to the settings, we're going to change the length to 200, standard deviation to 1, and this is going to give us a rough approximation of what we're trying to do here. Okay, how do we read this chart? What is going on here? Okay, this essentially shows us which way the market is trending. So essentially, if the market or the stock SPY is above this top blue line, we're in an uptrend. We're trending up. So that means that as an option trader, we want to be selling put credit spreads. If the stock is below the bottom blue line, we are trending down, which means we want to, as option traders, be selling call credit spreads. If we're in the middle here, we're going to have a lot of volatility because the market's going to go back and forth, back and forth. So we're going to be trading put credit spreads, but put credit spreads that are a bit further out of the money, so that we're a bit more safe, since anything can happen when we're inside these two lines. Okay, cool. Now that we got that gist, let's jump over to the trading handbook. Okay, so again, you can read more about the specifics, investment thesis, how this works, whatever. Let's dive into the first strategy. I'm going to be highlighting 3 from this PDF today. Number 1 is the squirrel strategy. This is a neutral sideways market play. So what is this? This is when the market is inside this little range right here. The best way to do it is to trade a neutral sideways market strategy. Why? Well, because when the market is within this band, it's highly likely mathematically to stay within this range. So we're not seeing a clear trend in any one way. We're seeing up and down movement when it's inside this range. So how we're going to trade that is very simply by following these steps. We're going to wait for it to be inside this, which is plus and minus 1 standard deviation, the 200-day moving average line, so we get a close approximation with this. Next, we need to determine our short strike price to set up this trade. Our short strike price is going to be 96% of the stock's closed price. So let's say that we're looking at the stock on this day right here, and we're inside this blue line, and so the stock closed at roughly 401.20. So if the stock closed, let me drag this into view, at 401.20, then we're going to calculate our short strike price by doing 0.96 and then rounding to the nearest whole number. You can see here 385. All right, so we're going to be going down to 385 and selling that level. So if we're here, 385 is right down here, roughly. This is 385. This is our level. This means that as long as the stock stays above 385, we're going to make money on this trade. What ended up happening? Well, we ended up making money because it went in our favor. But let's finish this thing. Next, we need to also know what strike price we're buying. This is a put credit spread. So we're going to sell the 385, and then we're going to buy the one right below it. So we're going to buy the 384. Cool. Now we know the details behind our put credit spread. Next, what is our expiration date? We're going to take the current date plus 14 days and round it to the next Friday. So again, let's just take today for instance so we can start doing, or let's just use an easy number for me. Let's say it's the 10th, right? If it's the 10th, we're going to add 14 days. So that means we're going to round up to the 24th. If the 24th, for instance, is the 24th like today, which is a Monday, then that means we're going to round to next Friday or this next upcoming Friday. So that means we're going to be rounding to, I believe, like the 28th or the 29th, something like that. So our expiration day will be the 28th or the 29th, whatever that next upcoming Friday is. Next, we're going to set up this trade in our broker. We're going to use the short strike of 385. We're going to buy the 384. We're going to go to an expiration date of July 28th. And again, we're going to ensure that we can collect at least 15 cents in credit. If all these are set, we're going to place the trade and move on. This is a set it and forget it trade that has a 93% win rate. And if we do this on repeat since 2007, we're going to have an annualized return of 10.84%. So this is the beauty of following this approach. Just one strategy alone right here will make you a little over the average market return by setting trades that are set it and forget it in less than 5 minutes a week. Cool. Let's go jump to the next strategy though, because we're not going to be limited by only trading when it's inside this range. Next, we're going to be like, okay, what happens if the stock or SPY is trading above this blue line? Well, that means we've now entered an uptrend period. This uptrending strategy is called the true turtle strategy right here. This is our bullish and uptrending markets. What we're going to do is we're going to wait for the stock to get above this blue line that we just mentioned right here for reference. This is our best approximation of the moving average deviations here. We're going to create our short strike price, which is 97% of the current stock. So we're above it right now, so we can use this as our approximation. So you can see here it closed at 454.20, and we're doing 97%. So that brings us down to 444.57, rounding to the nearest whole number is 441. So you can see right here, it wants us to take the 441 as our short strike for our put credit spread. So 441 right here. And then we're going to buy the one right below it, so the 440. So our put credit spread will be 441, 440. Next, what is our expiration date? Well, instead of doing 14 days out, we're going to do 12 days out and then round up to the next Friday. So again, today right here is the 24th. So if we add 12 days, it's going to be the 36th, which does not exist in July. So we got to jump to the next month. So it's going to be roughly, we're looking at August. Let's see if I can do math. August 8th, around there, and then we're going to round it to the next Friday, so it's going to be around August 10th or 11th or something like that. Sorry, dates are not my forte. Anyways, we're going to be doing around there. Let's just say August 10th for the sake of this video will be our expiration date. Cool. Next, we're going to go to our broker and we're going to set up this trade. We're going to sell to open the short strike, which is 411. We're going to buy to open the strike below that, which is 440. We're going to use our strike price or our expiration date of August 10th/11th, whatever it is. And if we can collect 15 cents in credit, we're going to put this trade on. A set it and forget it trade with a 95% win rate that will make us 34% annualized return. That's going to 3x the average market return just by using this one simple approach on SPY. The backtest is here. You can also click the link down in the description to see the backtest for yourself. This is what me and my members are using every single week. Again, that program though is opening here very soon. So if you want to get my personal alerts and our algo alerts, that program opens on the 27th. Anyways, the last but not least, the final strategy. We can make money in sideways markets and uptrending markets, but guess what? We can also make money in downtrending markets when the market is headed down. That is going to be right here, the short play strategy. This short play strategy has about the same rules as the other one, but we're going to do a less time intensive approach. So for instance, once it breaks below this blue line, we are now good to go to sell call credit spreads. So what we're going to do is we're going to determine our short strike price, which is going to be the current stock close price times 104%, or essentially 4% above the close price. So let's say we're trading this right here. You can see how we're below. Okay, well, it closed here at 413.50. So you're going to go 413.50, if I can type, and then we're going to go 1.04, and that's going to give us 430. So 430 is going to be the call strike price that we use. So I believe that was right here. 430 is going to be right here. Cool. So this is our call credit spread. We don't want it to get above this level. If it stays below this level, we make money. So just like before, we're selling the 430. We go up 1 to the 431, and that's going to be the strike we buy. Next, what is our expiration date? The current date plus 9 days. So it's currently July 24th plus 9. That's going to make it around August 2nd or 3rd. And so that's going to have to go up to the next Friday. It's going to be around August 5th, August 6th. Let's just say August 6th for this video. Remember, I don't know dates. Okay. So now we're going to set this trade in our broker where we sell to open the, what do we determine? 430, which means we're going to buy the 431, and then we're going to use an expiration date of August 6th or whatever I said it would be. If we can collect 15 cents in credit, we're going to put this trade on, and that's exactly how we do it. You have a 96% win rate, and you'll make 4% every single year following this approach. So if we combine all these strategies together, because we won't be doing them all at the same time but different times, we have a 4% return on the short play, a basically a 35% return on the trending play, and a 10% or 11% return on the neutral play. So this gives us 11 plus 35, which is 46, plus 4, so 46 plus 4, 40% return. Now you're making a 40% return every single year by trading the upside, the downside, and the neutral markets just by doing set it and forget it credit spread strategies. Again, if you want access to this free PDF, click the link down in the description. If you're learning more about credit spreads, if you want entry and exit rules, that's what this whole thing is for. I talk about trade sizing, exit rules, and so much more. So this is all for you for free. Again, I'm giving this to you in hopes that you like it, you make money with it like tons of other people have, and then you like me enough to join my program, which is opening up on July 27th. Alright guys, I will see you in the next YouTube video. Smash that subscribe button and thumbs up button. See ya later.